All right, so in this video, we're going to be talking about a very, very powerful signature to look for in price, okay? Now, this signature it's not actually anything new, okay? This is something that I actually learned from ICT way back, and I've been utilizing it in my trading for a long time. And when I see this signature, I know right away, oh, buddy, we got something very high probability at our disposal. Of course, considering we got everything aligned, right? And you know, I see people making videos on this now. I see people on Twitter now. And I see these people acting like they created this. I've seen it a little bit. And people act like they created this concept, and it's ridiculous. Like this shit's been around, fellas. I see people now trying to make this as like the next new thing, right? I mean, there's a new thing every other fucking week, right? This is nothing new. It's a very powerful signature though, but they'll get it misconstrued. Like ICT's been talking about this for the longest time. I can't remember the video exactly that he talked about this in. It's one of his older videos on his YouTube channel, but at the top of my head, I can't remember it. But whenever I learned this, like it was a light bulb moment for me in regards to technical analysis. It's a very powerful signature. And I have videos on my channel talking about this as well. Some I can't remember exactly which ones, but I have models based around this too. What we're going to, so let's kind of start from the top here though, to kind of get that full picture. Because I had a trade on this Euro USD on Wednesday. So what Euro USD essentially ended up doing here is this thing came down on Wednesday and it tested this old high right here. So it found support off the old high. What ended up happening after we found support off the old high is we put in a swing low level. Okay. It comes down into support. And also you need to realize that this thing's in a higher time frame discount as well. How do we establish that? Again, you just take your Fibonacci from that high to that low. You can see this thing's in the discount marketplace. It came down to higher time frame support. And now what we see happen here is price is putting in the swing low. Now this is going to confirm at 9 o'clock, meaning that's going to close at 9 o'clock. And what you're going to see here, fellas, is when you have this is, I think most of us understand what a swing low is, right? Okay, you have your lowest low in the middle, the higher low on the left, the higher low on the right. But we're going to really dig a little bit deeper into this signature because people overlook this. It's like it's in plain sight, but it's so powerful when you have this, what I'm about to tell you. Okay? And you, as I said, you could literally build models around this. It's very powerful. And I understand when I have this, it's high probability. What you need to understand is once that confirms and you have, of course, everything else, like there's different variations of this signature, meaning like sometimes it'll pull back into a discount within a bullish market structure, then you'll put in the swing low level. Sometimes it's like this where it'll be overall having like a really big sell-off, but it'll be in a discount marketplace. But what you need to understand is that third candle is a very powerful magnet once it closes. That third candle high, not the body, but the absolute high that was traded on that third candle of that price swing is an extremely powerful draw, an extremely powerful magnet, okay? Price is indicating to you in simplest terms that it is finding its bottom here. And you're early in the move because it's just now putting in that price swing. You're early in the move and this is that third candle high. Now if you look a little bit deeper into this, where you see these swing points put in, if you go down to a lower time frame chart, and this is the importance of having that multi-time frame analysis. What you'll notice if you go to your lower time frame chart, your highest probability market structure shifts will have this signature, okay? So what you'll see is we have this swing low put in. And what you also see on this Euro USD is this is where we had the 1 hour shift. Now I entered a little bit before that actually closed with meaning like that 4 hour, a third candle draw. But I saw that and I was kind of thinking ahead here. It's like, this is going to be confirmed come 9 o'clock. We're pulling back into a discount right now. Okay. So you see how this thing has this shift in market structure on the 1 hour chart. You see how it took out that, or we had that bounce off that higher time frame support. We took out Asian session lows liquidity. And then we had this push up because it is multiple. It's not just like one single thing. Like you got to have that full picture, that's still that full understanding of price and understand what makes a shift in market structure valid. Because it's not just third candle draw. But the thing is, we get this shift and now you have this 4 hour swing low put in. and we understand that we got that 4 hour swing low put in, we got that third candle draw. And if you were to go into this lower time frame and study this, whenever you have that signature, those are going to be your highest probability plays. When you have that third candle draw intact. Because here's the deal, fellas. You see how this thing, you see how that closed right there? That closes at 9 o'clock. And then once you come into a brand new candle here, it's going to draw to that high right there. That's going to be that powerful magnet. Okay, it's going to be gravitating to take out that high. Why? Because there's buy side residing above that high right there. There's liquidity residing above that high right there. You're early in the move. Think of it like you're early in the move. All right, because you're just now putting in that swing point. It's off of higher time frame support. It's taking care of significant sell side down below. And that significant sell side, by the way, being Asian session lows on this play. It took out Asian session lows, higher time frame support, and it put in this swing low. So I want you to think of it like this. What's next? What's next? It's already in a cheap marketplace, fellas. We've already established it's in a cheap marketplace. It's already taken off significant sell side. It doesn't need to move lower now. It doesn't need to move lower. It already has sufficient liquidity. So it has that change in trend now. Where's your next draw going to be now? This high. That's your next, I repeat, that's your next buy side liquidity pool right there. Right there. That's your next level of liquidity. Because it's already taken Asian session lows, so why would it move lower, fellas? Why would it move lower now? It's already taken Asian session lows this morning in London session, which is a key time for Judas swings. See how that connects perfectly? Your London Judas swing takes out Asian session lows, higher time frame support, and now you have this swing low put in right here, and you have that third candle draw. That's going to be your next draw, of course, after you pull back into a discount. And again, that's where that key market structure shift comes into play. You get your shift right here after taking Asian session lows liquidity. You have that strong push up. You have that swing low put in right there. And now you have that third candle draw. Look right here. Look at my cursor right there. And come to 9 o'clock, it actually confirms. And again, I entered before 9 o'clock, of course, because I understand it's probably headed up here. We got the shift to market structure. We got Asian session lows taken. And I saw that happen. I was thinking ahead here. And it's like, okay, this is going to confirm come 9 o'clock as well. I'm going to have that third candle draw into 9 o'clock too, which is just that, I understand this is very high probability because of that. Because once that is confirmed, that's going to become a very powerful magnet, this high right here. The second you get that swing low put in, and you can go to the 1 hour and you can now see you got that shift in market structure. And when you have that signature, these are the most high probability shifts in market structure that you'll see when you have that third candle draw in play. And then what happens? It pulls back into a discount, gives you optimal trade entry as well, which is 62% retracement. And then you look to run out those highs up above, because that's the third candle draw. Clean, just like that. And don't take my word for it, fellas. Like, this shit repeats. Like, it repeats. And it's not just subject to one time frame. Like, because price is fractal, remember. And it's just super powerful. When you got that, these are the shifts in market structure that are going to be the most respected, because like, it's your next liquidity pool. As I said, like, if it's already taken out Asian session lows down here, it has a higher time frame support right here, and then you get that shift. Yeah, like in the short term, it's going to want to do what? It's going to seek internal range liquidity, because after it has that shift, on that push up where you're having that shift, you're taking out external range liquidity. So in the short term, it's going to come down and seek internal range liquidity. But what's it going to do after it seeks that internal range liquidity and it rebalances that price action? Why would it take this low, fellas? Why would it do that? It doesn't need to. It's only taken Asian session lows, which is the key liquidity pool. It has higher time frame support, and it's doing this again. There's just that time element. There's that time element that it's making that low in London session. That's the key time where Judas swings occur. There's your Judas swing. Why would it need to move lower? It doesn't need to. It only has sufficient liquidity, and now it's rebalanced its price action, and now we have that third candle draw. So guess what? That third candle draw right there, the high of that third candle is going to be that next liquidity it seeks. That's going to be the next, because now the momentum has shifted. Think of it like that. The momentum has shifted. It has that swing low while being in that discount as well, may I remind you. That's going to be that magnet for price right there. Like, you're early in the move. You're very early in the move. Okay, you're not chasing. You're very early, and it's going to be that next magnet for price. 1 hour shift, rebalances it, seeks third candle draw, just like that, fellas. It's a super simple signature, but if you just implement that one little thing, you're going to get much higher probability plays. You can build entire models around that. It's so powerful. Hope you enjoyed. If you did, leave a like, subscribe, and I'll catch you later.